In the professional world, logic is a superpower. If you're an engineer, a surveyor, or a lawyer, your career is built on the fact that if A plus B happens, then C is a guaranteed result. But the moment these professionals enter the stock market, that logic becomes a liability. We've seen some of the most analytical minds get humbled by a simple 5-minute candle. Why? Because the market isn't a math problem to be solved, it's a psychological battlefield. So today we're going to deep dive into the logic paradox. I'm going to explain the 3 specific mental models that are sabotaging your P&L and the educational shift that needs to be made to finally become a profitable investor. Most high achievers are deterministic thinkers. They believe that if you gather enough data that you can accurately predict the outcome with 100% certainty. In construction or in science, this generally works. Gravity is constant. But trading is a probabilistic endeavor. Imagine a deck of cards. Even if you know that there's more red cards than black cards in the deck, you cannot know the next color that the card will be. You can only know the probability. And smart traders stop looking for the answer and they start looking for the edge. An edge is simply a higher mathematical probability of one thing happening over another. And if you can't handle being wrong while being logically right, you're never going to survive the markets. Intelligent people have a deep-seated need to know when something is happening. When a stock drops, they check the news, they check the earnings, they check the macro environment. But here is the educational truth. The market is a leading indicator, the news is a lagging one. By the time the why is clear in your logical brain, the move is already over. Viral traders and professional ones understand that price action represents human emotion in real time. You don't need to know why the trend is happening to profit from it. You need to just recognize the pattern and manage your risk. This is the math that kills smart traders because they're used to being right. They find it psychologically painful to admit when they're wrong, and they hold and hope. Remember, if you lose 50% of your capital because you were too smart to take that small loss, you have to make 100% gain to get back to zero. And this isn't a trading problem, it's a maths problem. And trading isn't about how much you make when you're right. It's about how little you can lose when you're wrong. And we call this positive expectancy. So how do you fix the logical brain that's hardwired to fail? You have to stop trading the market and start executing a system. And this is a pivot from subjective guesswork to systematic precision. So step 1 is the algorithm definition. In the professional world, we use standard operating procedures, and trading should be no different. You must define your edge with such clarity that a computer could execute it. Instead of saying the chart looks bullish, you say if the 20-day moving average crosses the 50-day moving average and the volume is 20% above its average, then we enter. And if you can't write the strategy on a post-it note, you don't have a system, you have a hunch. Step 2 is the law of large numbers. And most traders suffer from outcome bias. They think a winning trade is a good trade and a losing trade is a bad trade, but this is scientifically false. In statistics, a single data point is just noise. A trend is a sample. You're not allowed to judge your strategy or your intelligence until you've executed at least 50 identical trades, and this shifts your focus from the pain of one loss to the probability of an entire sequence. And step 3 is the biological audit. In high stakes environments, the greatest variable isn't the equipment, it's the operator. You need to treat yourself like a high performance machine. Don't just journal the entry price, journal your psychology. Were you revenge trading to fix a previous error? Was your heart rate elevated because your position sizing was too large? If you're trying to solve the market's next move, you're in an emotional state. But if you're calmly waiting for your rules to trigger to tell you when to enter, then you're in a professional state. And trading is the ultimate mirror. It will show you every flaw in your logic and every gap in your discipline. But once you stop trying to be the smartest person in the market and start being the most disciplined person in the room, everything changes. Remember, the goal isn't to be right, the goal is to be profitable. Good luck in the markets, guys, and I'll see you in the next one.